Good evening, ladies and gentlemen. Today is the 27th of August and generally first day of the September series, and it was a day where some interesting things happened. We had a flat opening when global cues were not so great last night, but okay during the day. Made a small dip and then from there shot up like 150 points, and yeah, the market was definitely not pricing in this kind of upside, so the massive call side expansion. At the same time, in conjuncture to that, there was really no decay on the puts. So it's like puts didn't give up any value for because a potential rejection is always there, and calls kept gaining in because of the threat of further short covering and whatnot. So all said and done, I think I was quite happy with how I traded the day, and I don't think I could have done anything drastically different to deal with the fact that anyone who's taken credit is not going to really benefit in this situation. So yeah, not a great trading day, but overall quite happy with that. I made some changes to the double diagonal spread. I booked a few legs, and I'll be making a video tomorrow most likely as to what a double diagonal spread is and why it is a relatively good trade to take in the current environment. So thank you so much for watching. Take care, and I will catch you next on Monday. Bye-bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:37. So into the opening, more or less what the idea behind the double diagonal that there will be an IV spike held true, because both options had actually gained the 16,200 and 17,000 call, which I needed to hedge this particular position with. So from yesterday where they closed, I more or less got the same prices. This closed yesterday at 80 and this closed at 90. It opened at 78 and 92. So the first thing I did was I purchased the hedges, mainly because it's a positional trade, so I need the margin benefit, right? It's a normal. So I've done that, and then for today's position, I've sold the 16,850, 16,300 strikes for my intraday triangle, and there has been a little bit of a dip. I'm not too concerned about this. I think right now global markets is trading in the positive, but last night there was quite a dip, about 0.5 to 1% on the US markets. So I'm more or less expecting that despite this break here, we will now see a move back above 16,600, which is why I'm not adjusting for the fact that even my double diagonals are slightly losing into the down move. My sacrosanct point beyond which I have to adjust the positional trade will be here. So any test of 16,500, even if we are to just test, I will have to very quickly adjust. Now, what kind of adjustment will I make? Nifty double diagonal will look crappy on the payoff chart because of the fact that the intraday trade is open. But basically here the idea will be, in case we start testing towards 35,200, I will be creating a position wherein I'll be creating a calendar more or less at 35,000, and this will be like so. So by doing this, I'll be able to increase my lower break-even point. I can also square off this call option and move it down. That is also a possibility, but I'll not be in a rush to do either of these things. I'll wait and let whatever daytime jitters have to play out, and then consider changes to be made. But yeah, so not punished very heavily for the fact that made a big execution error towards the end yesterday, and yeah, the time is 9:40. We'll keep you posted. Also, one more thing to note, and so this will hold good for majority of double diagonal trades as and when they're open. The way I react to moves in intraday trading will be very different from the way I react to adjusting the double diagonal spread, for example, something that I'm going to be carrying over at least 3-4 days. So In intraday trading, I'm very tight with risk management because one, my quantity is going to be on the much higher side, and it's going to be leveraged either with the MIS benefit or at least the hedging benefit. And so also that trade begins and ends on the same day. So the view of the week doesn't particularly matter. Whereas when it comes to the positional trade, it shouldn't be too quick in adjusting for slight delta differences here and there, and you can sort of hold on to the view for a while, unless the point at which you want to adjust, or rather should absolutely adjust, is being breached, and that's when you have to take corrective action. So yeah, initially morning dip, but I don't see too much of a further cascade at today's given situation. And with 16,600 straddle pricing in about 190 points, that gives us 16,400 and 16,800 for this week's expiry, and yeah, that sits really well into the range of my double diagonal spread. And yeah, Bank Nifty as well. Bank Nifty, in my view, is slightly bullish, but that's okay. We'll wait and see how things pan. So quite a massive IV crush on later dated options. India VIX as well, down 4%. So as a consequence of that, what happens is that since your long end of month options, they can lose quite a bit. See, this call option has lost quite a bit. So fall in IV is obviously never good for a double diagonal, but it's much better than if it's a calendar. Fall in IV in a calendar, what you're going to do, because you really can't do much since your long options are basically bleeding, and your short options can't give up too much money too quickly before the expiry. So that being the case right now, the problem that I'm facing is that long options are falling off quite a bit. But at the same time, there's an up move, so that is definitely benefiting my both positions, because both of them are delta positive. Now, as far as the intraday position is concerned, there's a little bit of an IV spike on the calls as we are now taking out the day's high. What I will wait and see is wait for a test of 16,700. We start testing 16,700, then potentially I will roll this call away. I won't be taking in any additional put side credit. I will just be rolling this call by 50 points as in when we test 16,700, because I want to keep today very straightforward and simple. So there's quite a bit of green coming in from a lot of stocks. Larsen moving almost 4% plus, and what this is leading to is us now heading to the day's high, and that's also leading to these calls spiking a little bit without the puts necessarily giving up anything. And so my approach here is to let the calls continue to expand. That's fine until we test 16,700. I'm not going to be too concerned about these calls blowing up, because if we don't break 16,700 on the upside, invariably these calls will have to give up value by close, and these puts also, if we do start heading higher, then I will square this off and roll it to 16,900, and these put options also will have to start giving up value at some point, unless there is in general an IV spike for us. But today being a Friday, people are not going to be carrying too many long options into the weekend, and that's more or less what I'm working with. We'll keep you posted. The time is 11:25. From my entry, I've not really made any change to the trade, and I think more or less the view is holding, so I'm not going to try and force a change when it's not necessary. I'll wait for 16,700 to be tested and only then make whatever changes are necessary. Okay, so just looking at what is happening in the weekly options, there is a large amount of put writing that is now taking place. That's 16,600, but overall positions seem to be centered around 16,600, 650, and 16,700. I'm not seeing too much in the money put writing after 16,700. So into this up move, definitely a lot of calls getting covered, and that is what is leading to the kind of spike on the call side. And yeah, without much of a corresponding move, really, there has been a considerable spike of calls. Now this Larsen position of mine, covered call, this call has basically doubled, but that's fine. It means I'm deeply benefiting on my overall position. And my idea will be I'll let this get to at the money, and at that point I'll see if it makes sense to make any adjustments. If not, I'll just roll forward the call. So it'll be one of the two situations. Okay, massive up move. We'll have to see what to do once we test 16,700. We'll have no other option but to square this off and roll this up to 16,900. I'm going to wait though. That's why I've kept my position sizing relatively lower today, so that I can sit on a one-sided move if it is bleeding, and wait for the most appropriate time to make a change rather than trying to preempt it each time and get caught in bad trades. Yeah, quite a short covering up move now. It's just a small move, a tiny move, but regardless, that is leading to a big call side fear spike. To keep you posted, time is 11:34. One option that's available to me is to take the 16,400 put option credit as well, and this hasn't lost from where it is. So from where it is currently at, if you see the past few candles, stayed in this range of 23.5, 24. It's not really given up much value. It's not like put options are giving up much value as the calls are spiking. So taking a look at monthly open interest, there is put writing at all lower levels. Call unwinding at 16,600 and writing of straddles at 16,700, 16,800, 16,900, 17,000, right? And clearly market is today positioning itself in quite a bullish manner, and yeah, that is something to be aware of. But I don't think that we will just go test here and very easily break out. It's very unlikely, and if that happens, it also means that as strength has to come from Bank Nifty, and since I have a position that is bullish on Bank Nifty, this particular one, I'm fine with having an intraday trade of this sizing, having a slightly negative delta. What's slightly negative? It's negative at this point. So yeah, still haven't made a test of 16,700, but just holding slightly under for now. Okay, so clearly we're now going to be testing 16,700, which is 8 points away. And what I've done is I've moved up my puts, mostly because if you think about it, one of two things will happen. If a rejection happens, my position will still benefit because of the kind of IV expansion on the calls. If there is a rejection from 16,700, I will actually gain. And in case there's a continued up move, because of the fact that puts haven't lost any value, if I move my puts up higher, I will potentially stand to gain more from that. So a very interesting situation. We opened gap down, made open flat, made a big down move from there, almost 120 points up. At the one we started trading at 190 rupees, and this is the move on Friday itself. So all that being considered, we'll keep you posted. For now, this position is bleeding quite a bit, and I'll probably from here allow myself to, on this sizing, give up 5 points, because there's potentially easily 10 points that I can get for the day if there is a little bit of cooling off in IB. So that's what I'm working with. Okay, so today the plan is to take under 0.5% stop loss. Currently on my standalone intraday position, I'm losing about 0.3%. So I cannot continue to let it bleed. And what's happening is it's a situation where no matter what is happening to the calls, the puts are not losing value at all, and on dips they're gaining. So it's an IV expansion at its truest form. That's good. It means that my Bank Nifty position, which was initially taking a bit of a hit, is now come back to neutral, and my other positions, so you have to consider this Nifty position here. The short legs are losing about 12,000 or so, and the long legs are making about 50,000 or so. So that is working fine. It's just that yeah, this particular call option has been bleeding for a while, but I'm quite happy with how it is spaced, and the credit that is there, that I can I don't see this position expanding by too much more.
if I have to take a 0.5% stop loss, that's about 3 points from here. I don't see that happening, so I think it's a pretty good risk reward to stay in, considering that we are entering the second half of Friday. And yeah, so as of now, you can think of it as trailing a 3-point stop loss. Very, very bullish overall positioning, and quite a strong up move. And these things happen only when people least expect it. So Airtel, Adani, Enterprise, everything. It's quite. You have steel stocks, you have banking stocks, you have a mix of everything. Broader Nifty moving up. Reliance has actually been quite weak today. To keep you posted, time is 12 o'clock. 3-point stop loss. So not much of a headache. Whatever happens, happens. We'll have to see. This is the good part about knowing where you want to exit. Okay, the time is 1 o'clock, and it look like this consolidation and then this potentially breakout candle situation is happening. The calls aren't reacting too drastically to it, mostly because they've been expanding all day expecting this to happen. So when the condition actually plays out, not too much of a reaction then. Once again, puts have not lost any value. For context, I moved these puts up when these calls were trading at like 25, 26. And in the last 4 points of expansion, there's been nothing from the put side. Yeah, weekly options IV continues to rise. And yeah, that's being a bit of a pain. But ignoring this, which is a positional trade, on my intraday trade alone, I'm down about 1.3. Yeah, about 1.3. And the max stop loss I'm going to take, which is 0.5%, would be about 1.6, 1.7, like that. So it gives me just that much more room. But given that at some point I'm expecting an IV crush in at least one of these options, it makes sense to hold. And despite here this break happening, there's not too much of a spike in calls because they're already anticipating that. It's already in the price. Okay, so the time is 2 o'clock. We've got 2:10, so 1 hour, 10 minutes for market close. More or less, we're just holding around 16,700. And finally, now there's a little bit of a fall off in premium. Earlier, when these spiked to about 32, I squared them off and rolled them to 16,900 because I didn't want to have to deal with the headache of this move continuing. It's just best headache avoided. So I exited them. From when I exited them, they've lost about 5 points. The position I entered has lost about 4 points. So 1 point is, I guess, given up there, but fair enough for avoiding the headache. And finally, there's a little bit of cooling off. My stop loss never really came to fruition because as of now on the intraday position alone, I am down just about 5 points. So very much in control. And I will probably hold this position as is till the end of the day, still trading with 2 points on the stop loss. Now, there might be some adjustments that I'll have to do to my double diagonal trades, both the bank Nifty as well as Nifty towards the close. And I'll go over what those changes are as and when I do them. And I thought it'd be nice to just put together how to manage double diagonal, what is double diagonal, when to execute double diagonal, kind of a video. So I'll record that just after market closes, and yeah, probably have put it up like tomorrow or day after. The time is 3 o'clock. We're basically holding at 16,700 still, and in the last minute, this triangle has actually gained 1 point. So gain another point. I'll just exit because there's about 25 minutes that I can probably be in this trade, and it doesn't look like there's going to be much of a fall off in prices before close. So there hasn't been, like, there is, after the entire IV spike into the day, at the end of the day, it really hasn't been much of a fall off. So that would give you an assumption that over the weekend there could be quite a bit of fall off, and yeah, that'll be interesting. What I'll be doing is I'll be taking additional credit on the put side leg of the double diagonal here. So I'll be moving up this put without moving up the hedge. So I'll keep the hedge where it is, and I'll move this up by 2 strikes to 16,500. I think that should be a good enough amount of credit to take in. That will give me an additional
14 points or so. And with Bank Nifty, I will be moving down this 36,100 call to 36,000 and leaving the hedge 350 points away. So what this does is this gives me more credit in the diagonal trade, which makes me less positive on IV, but it also makes me less susceptible to a further crash in IV. So that is more or less the idea, because I entered this Bank Nifty position yesterday towards the close, and what has happened is the crush in IV in later dated options, even though it is spaced in a diagonal way, is more than what my short position has gained. And potentially, in case there's a gap down on Monday in Bank Nifty, I don't want to have to deal with the fact that this would have expanded quite a bit. So I will be moving down my calls. So yeah, we'll keep you posted. Time is 3:03, and really not a lot that could have been done today. More or less happy with how the day went, and just waiting to take the exit. Okay, now this is just expanding and we're having a slight up move. So I'm just going to take the exit on the position. It has literally not lost anything. It's closing at a day's high. Hopefully I don't get too much slippage in this exit because of the spiking demand for calls. Really not much that could have been done today, I think. It's just one of those days. We'll just exit the hedges now, and yeah, all said and done on the intraday position, that is about 1.5 of a loss that has been booked. And that's fair enough. I think today there was really nothing that could have been done to salvage this position, more or less. Okay, so what I've done towards the close now is booked my these two legs of the double diagonal. So in Bank Nifty, I've booked the 36,100 call short, and that's 86, and I've booked the 16,400 put option, that is 77. And in the case of Nifty, I've moved up the put option to 16,500, and in the case of Bank Nifty, I moved down the call option to 35,900. What this will do is, in case there continues to be a little bit of an IV crush in later dated options, that will protect my position. And also, as a triangle itself, this gives me a flatter payoff at this point by structuring my trade this way. So I'll be covering more in terms of the whole double diagonal thing and how to manage it and when to make what kind of changes in a video that I'll record now and probably upload tomorrow or day after. Thank you so much for watching. I hope you had a good trading day. I think overall I was happy with what I did. I don't think there was much else that I could have done in this situation. Yeah, I will catch you on Monday. Take care. Bye-bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.